Welcome back for another week in review, and this is for covering November 13th through November 19th. Now, we didn't have the same exciting week that we had the week prior to, with CPI coming in showing that inflation has finally started to slow down and the efforts that the Fed has been making finally started to bear fruit. But let's take a look at what the week looked like. All right, so first up is the October Producer Price Report. This showed that inflation increased to 0.2%, which they had forecasted that it was going to be 0.4%. So this was another cooler inflation report that the bond market really liked. Now, there were some comments made. The Fed has done a lot, increasing rates to 0.4%, but they still have a lot of work to do. Now, we had talked about that previously. The Fed is probably not going to stop increasing rates until they see that inflation is dramatically slowed down, because remember, they're trying to get to the 2% level. Now, what they did mention, which we'd also discussed, is that instead of December's rate increase being 75 basis points, it may only be 50 basis points. But we'll see, obviously. Retail sales rose to 1.3%, and the forecast was 1%. So this showed stronger spending by consumers. Interestingly enough, Walmart said that 75% of their purchases were made by households with an annual gross income of $100,000 or more. Now let's take a look at the charts. So on Monday and Tuesday, the market was up because the St. Louis Fed president had stated that the Fed's policy is not that restrictive yet, and they may need to increase rates to 7%. So if you see last week, the week prior to, this is where we closed off. And if we kind of follow that line straight across here, we can see that interest rates pretty much, or the bond market, stayed almost where they were. There was a little bit of movement as far as interest rates go. And now let's take a quick look at that. So the conforming interest rate, that stayed about the same, about 6.5%. But these are up about 0.25%, and this is for your FHA, your USDA, and your VA loan. They're up just about 0.25%. So some quick final thoughts for you. This is a light news week. I don't see much movement taking place with the bond market or interest rates, unless for some reason we get like a crazy outside of the box new home sales report this Wednesday. I don't really foresee that happening. So my belief here is, and my humble opinion is, that interest rates will remain steady moving forward. If you want to make sure that you get notified every time that we release our week in review, make sure you subscribe to the channel. If you have any questions or anything that you'd like us to additionally discuss when we're doing these, please leave a comment below. And again, have a wonderful and safe holiday.